Welcome to Channel's Business Global with me, Juliana Olayinka, from our studios here in London. Over the next half an hour, we'll be looking beyond the business headlines by giving you in-depth perspective on the stories that are affecting all of us. Coming up on today's show, we'll be speaking with the British Deputy High Commissioner to Nigeria about renewed ties between both countries. Nigeria's first quarter GDP results were released this week. With growth still slow, how can Africa's largest economies steer clear from the forecast of a contraction in GDP of between 3 and as much as 8.8% this year? We'll be having some analysis on that. And the NYC trading floor is opened after 2 months of a COVID-19 lockdown. Can the optimism that's sweeping through Wall Street have a positive effect on the wider American economy? Then later, we'll be looking at how the creative world can sustain investment in a post-COVID global economy. Before those discussions, here's our business correspondent, Simon Pusey, with a breakdown of the biggest business stories trending in Britain this week. Simon, a surprise U-turn from the Bank of England about the doom and gloom expected in the British economy.
Yeah, just a few weeks ago, Andy Haldane, the chief economist at the Bank of England, said that the UK economy could be facing its worst crash in 300 years. And yeah, there's huge sort of repercussions when he said that. He's since said that it's going to be that there will be a recession. We are currently in a recession, but it's going to be worse than feared. He talks about a V-shaped recovery. So you obviously go down and then up to sort of the same kind of level that we were before this happened. And part of this is he's talking about interest rates. Obviously, everyone's looking at interest rates and what the Bank of England might do. And one of the things that was possibly mooted if it was going to be a really heavy recession was that they're going to cut interest rates to below zero. He now says that that's very, very unlikely. He was saying that, well, this sort of follows remarks about a week ago from the Bank of England's governor, Andrew Bailey, who said that it would be foolish to rule out that possibility. He's now come back, Andy Haldane, and said that that's probably a very unlikely. He said the Bank of England's base rate is already at a record low level of 0.1%, but policymakers, under growing pressure to push it even lower, have said that that's probably not going to happen. So negative interest rates, obviously, that's been deployed by several countries at the moment. The European Central Bank and Japan have both put that into place to try and bring about a return to sort of recovery, and it really helps people who are struggling, but in terms of savings, obviously, people who want to grow their money, it's not great for them. So yeah, that's a bit of a U-turn from them because at one stage they're saying it could be a huge recession and we might go negative interest rates. At the moment, it looks like they haven't done that. So a little bit of good news for the economy, and obviously wait and see what the high street looks like, whether shops do start to reopen in 2 weeks, as Boris Johnson has allowed them to, and whether the economy does continue to pick up.
Absolutely. It's still a long year, 2020, isn't it? Simon, as always, thank you so much.
Thank you.
Here's some other business news from across the globe. This week, government officials from both the UK and Nigeria pledged commitment towards keeping the flow of bilateral trade and maintaining existing investments throughout the COVID-19 crisis. According to the most recent data, the total trade in goods and services between both countries is worth £5.1 billion. During the third UK-Nigeria Economic Development Forum, Britain's Minister for International Trade also gave assurance of the UK government's commitment to helping reduce poverty through trade and technical assistance. Now, for more on this, I'm being joined by British Deputy High Commissioner to Nigeria, Harriet Thompson. I must start with a burning question I know our viewers across the world, especially those here in London, would want to know is how are the repatriation flights going? I know 1,700 have left Nigeria already, and you have just announced that there will be, I believe, 3 more flights.
Yeah, we've actually had to up that to 4, given the demand for the flight. So we've got 3 flights now leaving from Lagos over the next couple of weeks, and another one that will be leaving from Abuja, but we'll be picking people up in Port Harcourt along the way. So yeah, there's huge demand for Brits here in Nigeria to get home. And I think the numbers are just another demonstration of how close the links are between the 2 countries. There are so many British people here, so many Nigerian people in the UK. And at times like this, when global travel is disrupted, trying to support those people is a huge part of what we have to do as governments in different countries at the moment.
Absolutely, and it seems to be going very smoothly thus far. Let's talk about that relationship, then the bilateral relationship, the trade relationship, because I know there has been a conference that took place earlier this week and both sides did pledge to sustain that investment and all the pledges that have been made. Why do you think that needed to be announced?
I mean, it's so important at the moment as we all focus on the health response to coronavirus and the pandemic that's affected everyone across the world, for us to remember that it's not just the health impacts that are going to impact on people's lives. The economic impacts matter a huge amount as well. And for us to be able to protect people's jobs, to be able to protect people's livelihoods, international relationships are critical. And the ability for us to continue to be able to move goods between countries, but then also within countries, is going to have a huge effect on the ability for people to maintain their livelihoods, to be able to feed their families.
You were here in January during the inaugural UK Africa Investment Summit. Nigeria were out and proud. They had a massive delegation and were really treated well. Has COVID-19 hampered any of those discussions? How has that ceremony, boosted the trade relationship between both countries?
I'm pleased to say that relationship remains as strong as it ever was. Despite all of the lockdowns, despite the restrictions on travel, we've had a couple of engagements just over the last few weeks with our ministers. So we had the next in our regular series of ministerial meetings between the Minister for Trade and Investment, Minister Adebayo here in Nigeria, and our own Minister for Trade, Minister Jayawardena in the UK, where they were able to talk about some of the issues that are affecting companies on both sides of the relationships, particularly now. And then again with Minister Adebayo, he kindly gave up some of his time to listen to the top executives from some of the biggest British companies that are here in Nigeria and heard from them about the issues that are affecting them. And these, many of these issues they're not new. Things that came up frequently were around the power situation, the forex situation, the ability to transport goods within Nigeria, which is particularly an issue now as the government tries to stop the spread of coronavirus, which is absolutely critical. At the same time, the harmful effect of that is restricting the movement of goods through Nigeria. And these are critical supplies for the health industry, for PPE, and for farming and so on as well. So really important that we make progress on some of those issues. And it was a pleasure to see the ministers on both sides, the companies here in Nigeria, being able to engage in those debates.
Absolutely. Just lastly, before you go, I listened in to a webinar where you were speaking alongside the Nigerian British Chamber of Commerce, and somebody did mention that women in Nigeria were vastly affected by the lockdown and the pandemic. And we've actually had some statistics released by the Office for National Statistics here in Britain saying that women are affected. Are there other groups or sectors that you've seen that have been adversely affected in Nigeria, and how are Britain and the embassy, the Commission, trying to help them?
So, all businesses are affected, obviously, from the very biggest, those who are working across borders, to the very smallest. And here in Nigeria, I think the sector that's been most affected is probably the informal sector, which accounts for so much of the employment and the money that's coming into families and individuals here in Nigeria. So things that we're doing with them, for example, through our Department for International Development, we're working with tailors in Kano in the north of Nigeria who are repurposing towards creating face masks instead of clothes, for example. We're working with the Manufacturers Association of Nigeria to help them shift production from their factories to be able to create PPE right here in Nigeria as well. British
Deputy High Commissioner to Nigeria, Lagos, Harriet Thompson, thank you so much for joining us on Channel's Business Global. Thank you. Closed since March 23rd due to traders becoming infected with the coronavirus, the New York Stock Exchange partially reopened on Tuesday, providing much-needed optimism for the American economy. The NYSE says it opened out of economic necessity, as many trading firms had been fearful their business would be closed for good if it had stayed shut much longer. For more on this, I'm now being joined by Lukman Otunuga, a senior research analyst at FXTM. The NYSE is open again after almost 2 months, in fact, over 2 months of a lockdown. How have the stocks fared this week?
Thank you for having me here today. Yes, we can see there's some semblance of normality returning back to markets, after that extended period of lockdown, and this has been reflected across global stocks. Yesterday, we saw the S&P 500 close over 500 points higher, gaining 2%. Transportation and land stocks also roared back to life as restrictions eased in the sector, and also financial stocks are doing very well on this optimism of the economy recovering. And I think moving forward, I expect Asian, European, and US stocks to continue gaining in the short term on this sense of optimism. However, though, this is unlikely to last. And I can't just help but feel this sense of deja vu that we've seen this before.
Gosh, we have, haven't we? I don't know. It's definitely not a V. It looks a lot more like this at the moment, doesn't it? Last week, the US Senate, they passed some legislation restricting Chinese companies on raising money from US investors unless they follow the rule to the letter of American legislation. I know it sounds a little bit confusing, but basically there are some people that are suggesting this has got much to do with the spat between Donald Trump and Xi Jinping than it has on whether or not the Chinese are keeping up to American standards. Do you agree?
I think this is quite worrying. I have mixed thoughts on this, and I think the key thing is we're seeing how tensions that was on trade is now moving to a different front, which is stocks, which is quite concerning. This move is going to really hit Chinese firms, especially those who rely on the brand premium on being listed in the US stock exchange, because the US stock exchange is seen quite transparent compared to local markets. At the same time, naturally, this is going to continue creating more tensions between both sides and raise questions whether we're going to see a phase 2 or phase 3 of the trade deal. But most importantly, with this, we have to look at this at a number dimension. If you look at the United States, Donald Trump's ratings have actually been dropping considerably. Now, terrible economic growth in the United States and the fact that the coronavirus has claimed, sadly, lives of a whole 100,000 Americans, it's not good for the president, especially ahead of the presidential elections in November. So this move could be simply to just build ratings ahead of the elections in the coming months.
Lukman Otanuga, thank you so much for that analysis. This week, Nigeria released Q1 2020 data that showed the economy grew by 1.8%. The data represents a drop of 0.23% when compared to the same period last year and a 0.68% drop from the previous quarter. Daily oil production was higher than the same quarter of 2019. However, economists predict that this sector, alongside travel and tourism, hospitality and manufacturing, are among those to contract later in the year. To delve through these numbers, I'm now being joined by Standard Chartered's Chief Economist for Africa and the Middle East, Razia Khan. Razia Khan, thank you so much for joining me on Channel's Business Global. Slow growth, yet still growth. What are your takeaways from Nigeria's Q1 GDP data?
Well, the most interesting point of the release, of course, because everyone has been so wrapped up in recent oil price weakness, was the strength of oil sector growth in Q1 2020. We know that the non-oil economy in the quarter prior to that had shown signs of an acceleration as the country prepared for more of the COVID containment measures. There's necessarily some slowing of growth in Q1. But what kept the headline numbers supported was that surprising strength, if you like, in the oil sector, reflecting the fact that for a brief period of time, Nigeria was able to produce more oil. The next few quarters, of course, are likely to look much more difficult for the Nigerian economy. Not only do we have more of the COVID containment measures impacting non-oil growth, that's about 90% of GDP in Nigeria, but compliance with the OPEC Plus production cuts that have successfully helped to stabilize prices will nonetheless mean that oil sector growth will likely go deeply negative. So it is unfortunately going to be a very difficult year for the Nigerian economy, and the Q1 2020 performance probably represents the high in terms of the quarterly performance for 2020.
Razia Khan, thank you so much for that analysis. Hopefully next time after the pandemic, I can get you here in the studio with us for more on Nigeria. Thank you so much. Coming up on Channel's Business Global, more reaction on Nigeria's Q1 GDP data and a discussion on investment in the creative industry. See you after the break. Welcome back to Channels Business Global with me, Juliana Olayinka, from our studios here in London. Before the break, I was speaking with Standard Chartered's chief economist for Africa and the Middle East, Razia Khan, on her reaction to Nigeria's latest GDP figures. For more analysis, I'm now being joined by PricewaterhouseCoopers chief economist, Andrew Nevin. 1.8% slow growth. What's your reaction to this?
Well, I think the number is a little hard to interpret. I mean, in a way, it kind of it came out higher than I might have expected. But I mean, the truth is, the question is what's going to happen in the second quarter, the third quarter, the fourth quarter. And I mean, I think we're definitely already in a recession on that. So I don't have a strong reaction to that number. I think we just need to be looking to the future and what to do, obviously on the health side, but also on the economic side.
Interesting. There have been some global headlines that were as surprised as you were. But then, of course, yes, everybody's looking at the detail and they're saying much later on in the year, the economy could contract by as much as 8%. There have been some economists in country, including Bismarck Rewan, who I know you're familiar with. He said there needs to be an urgent ideological shift. What does that mean? Is that even possible in a country as nuanced as Nigeria?
Well, I think my brother Bismarck, I always listen to it. Of course, we often share the platform together. But I mean, I think that the way we've been putting it is what's happening in Nigeria is the term we're using is a forced restructuring. So you've had a collapse of the fiscal structure, really, where the oil revenue flowing to the Federation accounts going from 5.5 trillion to 1.1 trillion. You've had other shortfalls of fiscal revenue. And then the federal government is making decisions that they never made before. So the fuel subsidy is now gone, effectively. The currency was devalued. There's a narrowing between the window, the two windows, between the official window and the I&E window. And all of those are things people have talked about for a long time to improve the business environment. And all of a sudden they're happening because the federal government, in a sense, has no choice. But we are headed to a very difficult fiscal situation. I mean, the collapse in the Federation account means I think that you'll find certainly, maybe as soon as this month, but certainly by June and July, the states are going to be in a very, very difficult position, and there's going to have to be a restructuring. So I think a lot of the decisions that have been delayed and caused subpar growth for the last 4 or 5 years are going to have to be addressed. So I think from that viewpoint, it may be a great positive for Nigeria.
Talking about positives, the negatives that were forecast about COVID-19 in Africa have been pretty grim. We've heard different things from the IMF, the World Health Organization, Oxford Aid. All of the charities were saying that they expected to see, it could possibly millions of people dying from COVID-19. That hasn't happened yet, but clearly there is going to be a change in the way people do business. What we've seen in the global north, do you think that will be replicated in the global south?
Well, I think some of the things that are happening, just the way we do business, for example, less commuting, more working from home, no one's getting on a plane for a one-day meeting. I think those things we will translate. And we're actually finding, and my clients who are in financial services are finding, that working from home is not so bad, and it takes a lot of pressure off the infrastructure. People are happier, they're not so tired, they're more productive. So I think we can see a significant number of days, office days, moving to working from home. So I think that is a impact for us. I think one of the other impacts that's going to be important, though, is to see what happens to supply chains, and it may be a benefit for Africa in terms of shortening supply chains, the introduction of AFCFTA, so people want to have production in Africa that way. But the biggest impact on Africa in the short term, of course, is just if the world economy does badly, that affects Africa, and it particularly affects things like investment into the nation, into Nigeria. So we need to have a bit of a plan to make sure we get investment coming out of this. And we need to be able to get people down to Nigeria to look at projects, be able to invest in projects, because we desperately need to get our foreign direct investment up.
We do, we absolutely do. We're going to be talking about investment with our next guest. But Andrew Nevin, thank you so much for joining me on Channels Business Global. I'm sure they're desperate to have you back in Lagos sometime real soon. The UK's largest art centre has joined other cultural organisations in warning of the dire financial effects of COVID-19 on the creative industries. In a statement released on Monday, the South Bank Centre says it is at risk of closure until at least April next year if the government fails to intervene. Well, for more on this, I'm now being joined by Yemisi Mokowolu, the CEO of Hatch Ideas Worldwide and the co-founder of Africa Town. Yemisi Mokowolu, thank you so much for joining me on Channel's Business Global. Usually when I see you, you're out and about in lavish events promoting all of your creative juices. And recently there have been some concerns because some analysts say that investment post-COVID-19 will be dire. Are you concerned about this for your industry?
Yeah, the immediate thing is to be concerned, but I actually see that as a huge opportunity for the creative industries. Right now, there needs to be new solutions and new business models, and this is an opportunity for the creative industries to actually show its value and align. I mean, what's been getting us through this situation? The music we're listening to, the books we're reading, and the films we're watching. So I think this is it's going to be a different bumpy start, but it's going to be an opportunity if we focus.
Well, that's some positive sentiment from you there. I know you're pretty involved in this Africa Town project, which I know has been going on for a couple of years now, which is basically a multi-million-pound initiative to finally give Africans living in London their own cultural hub, as we've seen within the Asian community. How are you talking to your investors about London being a prospective place for their money, considering we've also got a Brexit transition to deal with at the end of the year?
Well, the truth is the property assets of London, the rules are going to be pretty much the same in terms of property. So it's going to be a very good investment. When you invest in property, there are so many different opportunities and ways in which you can do it. It's a very stable environment historically anyway. And the pound's value means that there's going to be much more opportunity for people. And the truth is there's loads of empty buildings. And whether we like it or not, this is the moment when people can come in and they can actually get those property assets that were out of reach at the height of the market. So for those who want to start a property portfolio, truth be told, this is the moment.
That's quite interesting, actually. And it's really important to hear that optimism, Yemisi, because, of course, we know, unfortunately, or fortunately for some, there are winners and losers in every pandemic and every downturn. So do you think this is an opportunity for those who perhaps wouldn't have been able to get those dream buildings or those dream businesses going? This is the time.
Absolutely. Look, the African community and the Black community in London have never really been able to have central London property and make a proper business case for themselves. And now this is an opportunity where we can have an equitable relationship. And so I charge businesses in Africa and and in London to actually look at this as an opportunity to get those assets and really maximize on it and create those trade links that we have been talking about for decades. I mean, you know what? You've got to be in it to win it.
You've got to be in it to win it. Just take me with you, Yemisi. Lastly, before you go, what's your opinion on Rishi Sunak, the Chancellor of the Exchequer's financial measures? There have been so many complaints from those within the creative industry. We're talking about Theatreland. We're talking about people that work on the set of popular soaps like EastEnders. They've complained, saying that, hello, we're here, we're suffering too. Do you think enough has been done to make sure the industry's propped up and can survive?
Absolutely not enough has been done. And this is where my optimism wanes as well. And I think that this really highlights and shows how neglected the industry has been. The fact that they're still in consultation phase and they haven't actually been able to put in any packages. Most of the creative industries is led by freelancers or people that work part-time, and they haven't been given an adequate enough package, and there hasn't been a strategy in terms of recognizing the incredible, wealth of investment that the sector brings in. So no, not enough has been done, and I'm really concerned that the government doesn't even know how to support the sector.
Of course, I think you're echoing what your colleagues have been saying so vehemently in the media. But Yemisi Mokwoli, thank you so much for joining me on Channel's Business Global. And hopefully I'll see you out and about soon at some sort of nice art venue, sipping orange juice when the pandemic is over. Thank you so much, Yemisi. Sadly, that's all we have time for today, but do get in touch with your comments and suggestions. I'll see you at the same time next week for more in-depth business analysis on Channel's Business Global. Goodbye.